In July of the year 2023, your bank dispatched a correspondence. It's highly probable that you discarded it alongside unsolicited credit card promotions and supermarket coupons. That very letter heralded a transformation in American banking, the most profound in half a century. Every facet of how your funds traverse our financial system underwent a swift alteration, yet this significant shift was presented as a mere routine service enhancement. Consider the typical stack of mail you receive from your financial institution: statements of account, privacy policy updates, new fee schedules. We've all been conditioned to disregard these notices, as they seldom signify anything of consequence. However, on this occasion, the circumstances were distinctly different. Your bank was, in fact, informing you that your account was transitioning away from the conventional banking framework and would henceforth be directly routed through the Federal Reserve's infrastructure. Allow me to illuminate the precise events that transpired. On the 20th of July, 2023, the Federal Reserve introduced a service known as the FedNow service. This was far more than just another payment application or a mobile banking feature. The Fed effectively retired the automated clearinghouse system which our nation had utilized for over 50 years to facilitate interbank fund transfers. Merely 4 days later, on the 24th of July, clients of Webster Bank received a communication detailing exciting developments concerning their accounts. And here is where the artifice becomes particularly cunning. A substantial portion of the correspondence from Webster Bank was dedicated to assuring customers of what would not change. Your account numbers remain unaltered. Your direct deposit will continue to function seamlessly. Your debit card will operate as usual. Access to 40,000 ATMs through the MoneyPass network is unaffected. This sounds reassuring, doesn't it? Nothing to be concerned about here. But concealed within the fine print of the accompanying informational document, nestled amongst the otherwise cheerful pronouncements, lay the unvarnished truth. Your account would no longer accommodate payments routed through private banking networks. Instead, every single transaction would now be processed via the Federal Reserve's own accounts. Consequently, the federal government now possesses the ability to observe every dollar you expend, every payment you receive, and every transfer you execute in real time. This scenario echoes a familiar pattern in American financial history. In August of 1971, President Nixon declared that our country would temporarily suspend the convertibility of dollars into gold. He assured Americans that, for them personally, nothing would change. Their salaries would continue to arrive as scheduled. Their savings accounts would remain operational. The local grocery store would continue to accept their currency. However, in reality, everything had fundamentally shifted. We had just transitioned from a sound currency backed by gold to a fiat currency entirely governed by governmental policy. Now, 50 years hence, we are witnessing a parallel phenomenon, a monumental shift in our financial regime, artfully disguised as an improved service. The crucial distinction this time is that banks are not even soliciting your consent. They are merely informing you retrospectively that your funds are now channeled through governmental channels rather than private banking networks. A spontaneous query: when was the last time you actually read one of those bank disclosure letters? The overwhelming majority of Americans never even open them. Banks are acutely aware of this fact. This is precisely why they chose this method to migrate our accounts onto the Federal Reserve's infrastructure without eliciting public discourse or debate. Consider the timing of this development. FedNow was not a hastily conceived response to a banking crisis. The Federal Reserve initially announced this initiative in 2019. It required 4 years to construct the underlying infrastructure, rigorously test the technology, and prepare financial institutions for this transition. This course of action was always the intended plan. The singular challenge was how to migrate American bank accounts onto the Federal Reserve's pathways without sparking public awareness or resistance. Customers of Webster Bank who did indeed peruse their July correspondence discovered something noteworthy. The bank dedicated entire paragraphs to elaborating on novel functionalities such as instantaneous transfers and round-the-clock availability. These advantages appear quite impressive until one reflects that services like Venmo, Cash App, and Zelle already provided instant transfers. Speed was not the true enhancement. The fundamental alteration was architectural. Your bank account has been reconfigured from a private banking relationship into a direct conduit to the Federal Reserve's operational framework. When you remit funds to settle your electricity bill or transfer money to your savings account, that transaction no longer occurs between private banking entities. The settlement now transpires through the master account system of the Federal Reserve. Reflect for a moment on what this signifies for our financial privacy. Prior to July of 2023, governmental access to your banking data necessitated judicial subpoenas, court orders, or national security letters. Banks acted as intermediaries, possessing the capacity to challenge unreasonable requests or safeguard client information. Now the Federal Reserve directly processes your transactions. They have no need to seek permission from anyone to scrutinize your financial activities because they are already managing your funds at the infrastructural level. However, here lies the element that should genuinely concern us as American citizens. That letter you neglected to read in July of 2023 did not merely relocate your account to the FedNow infrastructure. By accepting the terms and conditions stipulated within the disclosure, you have also granted preemptive approval for the subsequent phase of this transition. When the Federal Reserve launches its central bank digital currency, your existing FedNow account will automatically evolve into a CBDC account. By the time you grasp the full implications of what has occurred, the migration will have already been completed. Your consent will have been assumed, not solicited. The infrastructural transformation that will enable the government to exert complete dominion over American currency has been executed through a standard banking notice, one that 95% of customers never even read. The foundational elements have been laid, the trajectory is clear, and the vast majority of Americans remain oblivious to the fact that their bank accounts are no longer managed through traditional banking infrastructure. They are already connected to the Federal Reserve's payment system, which is poised to become the backbone of digital currency control. Your bank did not merely upgrade your account in July of 2023, it transferred it to a governmental payment control system. The next stage is already meticulously planned. Allow me to explain precisely what transpired with your finances when your account was transitioned to FedNow, because understanding the technical specifics reveals why this transformation is so critical to our financial liberty. Before the advent of FedNow, when you paid your mortgage or sent funds to your children attending university, the transaction proceeded through the automated clearinghouse system. ACT processed payments in batches during business hours. A payment could remain pending overnight or over weekends before its eventual completion. This method appeared inefficient, but in actuality provided crucial safeguards. Under the previous system, payments were exchanged between banks via private networks. If you transferred money from Chase to Bank of America, these two institutions would settle the transaction between themselves, utilizing their own reserves and established relationships. The Federal Reserve maintained an oversight role but did not directly process every single transaction. Banks retained a degree of autonomy in how they manage customer payments. FedNow has fundamentally altered this architectural design. Your transactions are now operational 24 hours a day, 365 days a year, facilitated by the Federal Reserve's infrastructure. Every payment made is instantly and irrevocably settled through the FedMaster accounts. When you purchase groceries, pay your rent, or transfer funds to savings, the Federal Reserve processes the transaction in real time. And this is precisely where the situation becomes concerning for our privacy and autonomy. Previously, the government required specific legal procedures to access transaction data, as banks held control over such information. Now the Federal Reserve views every payment as it occurs because they are processing it directly. They do not need warrants or subpoenas to monitor your spending habits. They are already managing your funds at the infrastructural level. However, the true revelation emerges when one comprehends the actual objective of FedNow. It was not about expediting payments for consumers. Venmo was already offering instantaneous transfers. Square Cash already facilitated immediate payments. The technology for rapid digital transactions existed years prior to FedNow's launch. The Federal Reserve established FedNow to prepare our banking infrastructure for central bank digital currency. Every feature of FedNow aligns perfectly with CBDC requirements: real-time settlement, direct government processing, irrevocable transactions, and centralized control via Federal Reserve master accounts. Consider the timing. The Fed announced FedNow in 2019, yet its launch took 4 years. What accounts for this delay? They required time to ensure a seamless transition to CBDC once the FedNow infrastructure was operational. The migration of your account in July of 2023 was, in fact, the initial phase of CBDC implementation. Here's how the adoption strategy unfolded. When FedNow commenced on the 20th of July 2023, only 35 early adopter banks activated it immediately. However, the system was engineered for rapid adoption through correspondent banking relationships. As large correspondent banks embraced FedNow, all smaller banks that they served were compelled to follow suit. Webster Bank serves as a perfect illustration of this dynamic. They utilize Fiserv for payment processing. Fiserv became an early adopter and partner of FedNow. Through Fiserv's MoneyPass network, over 2,000 financial organizations gained connectivity to the FedNow infrastructure. What appeared to be independent choices made by individual banks were, in reality, a coordinated transformation of infrastructures. This explains why that letter emphasized the benefits of MoneyPass. Access to 40,000 ATMs may seem like a customer advantage, but MoneyPass is, in essence, the conduit linking local banks to the Federal Reserve's infrastructure. Your bank informed you about ATM access while omitting the critical fact that your account was being rerouted to governmental payment channels. The irrevocability feature of FedNow introduces an additional layer of governmental oversight that was absent in the traditional banking system. When you send money via FedNow, the transaction cannot be reversed once completed. This fundamentally differs from ACH payments, which permit reversals, and credit card transactions, which allow for chargebacks. Why would the Federal Reserve design a system devoid of reversal mechanisms? Because irrevocable transactions grant the government unprecedented control over financial movements. They can seize funds, freeze accounts, or reroute payments without banks or customers having the ability to undo such actions. In situations where emergency powers are invoked, the FedNow infrastructure enables immediate and irreversible financial control. But here is the most significant aspect of this transformation. The infrastructure now in place permits the Federal Reserve to deposit digital dollars directly into citizens' accounts, bypassing bank intermediation entirely. With the launch of CBDC, the Fed will no longer require recourse to private banks for digital currency distribution. They already possess direct access to your account via FedNow pathways. This capability radically alters the relationship between citizens and the government. Throughout American history, banks have served as intermediaries capable of protecting client interests, challenging unreasonable governmental demands, or providing financial services independent of political pressures. Now the Fed is eliminating this layer of intermediation. Your account now functions as a node within a Federal Reserve payment network rather than a private banking relationship. An infrastructure now exists that empowers the government to regulate your spending, monitor your transactions, and restrict your financial choices in real time. They have embedded this functionality within the system's architecture rather than as individual account features. The majority of Americans who received those letters in July of 2023 had no inkling that they were preemptively agreeing to the CBDC transition. The terms and conditions concealed within the bank's disclosure documents contained language that authorized the migration of accounts to advanced Federal Reserve services and innovations in digital payments. Legalistic phrasing that appears innocuous but actually pertains to the implementation of CBDC when central bank digital currency is launched, likely between the years 2026 and 2027, existing FedNow accounts will transform into CBDC accounts through automatic conversion. Banks will dispatch another missive detailing exciting enhancements to your digital wallet's functionalities. However, the infrastructural change was already effectuated in July of 2023. Your bank account did not simply receive new features, it was fundamentally restructured, moving from private banking institutions to the Federal Reserve's operational framework. This transformation was conceived in 2019, implemented in 2023, and completed before customers even comprehended its implications. The pathway to CBDC is now operational. By assenting to the terms of that letter, which most individuals will never read, Americans have pre-approved the next stage of financial transformation, one that will erode monetary privacy and enable programmable control of funds. Now that you understand how FedNow has reconfigured our banking infrastructure, let us discuss the reasons behind this transformation and what is to follow. Because the true purpose of FedNow was not to benefit consumers. The objective was to prepare our financial system for complete governmental control via central bank digital currency. The Federal Reserve did not create FedNow to compete with Venmo or to expedite payments. Those issues had already been resolved by private enterprises. The Fed established FedNow to forge direct relationships with American citizens, thereby eliminating banks as intermediaries between the government and citizens' funds. Here is the timeline they are adhering to. In 2023, the FedNow infrastructure was launched and account migration commenced. Throughout 2024 and 2025, adoption will accelerate across our banking system via correspondent banking relationships. By 2025 or 2026, the Federal Reserve will announce CBDC pilot programs, likely commencing with government employees and federal contractors. The commercial launch of CBDC is projected to begin around 2026 or 2027, presented as a natural evolution of the digital payment enhancements already experienced through FedNow. By 2027 or 2028, the most significant transactions will mandate the use of CBDC. Traditional cash payments and private digital ones will be curtailed or entirely eliminated. This is where programmable money control becomes a tangible reality. Central bank digital currency is not merely digital dollars, it is currency with governmental code embedded within every transaction. The Federal Reserve can program spending restrictions directly into your CBDC wallet, funds that expire if not utilized with sufficient speed, purchases that can only be made in specific locations or for approved categories, savings that are automatically transferred to government accounts in the event of declared emergencies. Consider what this implies for your everyday financial decisions. Presently, if you wish to travel out of state for a vacation, purchase a firearm for home defense, make a political contribution, or acquire items deemed unhealthy by the government, you can utilize cash or private banking services to maintain a degree of privacy. With CBDC, every transaction will be monitored, categorized, and subject to programmed limitations that you cannot circumvent. The Federal Reserve has already tested these control mechanisms through COVID-19 pandemic programs, emergency rental assistance that could only be allocated for specific approved expenditures, stimulus payments that expired if not spent within defined periods. CBDC will render these restrictions permanent features of our monetary system rather than temporary emergency measures. Why have banks cooperated in this transformation? They had no viable alternative. The Federal Reserve mandated infrastructure modernization as a prerequisite for continued operation. Banks that refused to adopt FedNow would forfeit access to Federal Reserve services, effectively forcing their closure. This was not a matter of market competition. It was a regulatory obligation disguised as a voluntary upgrade. FedNow serves as a testing ground for the real-time settlement technology required by CBDC. Every feature that facilitates FedNow's smooth operation also enables central bank digital currency, instant, irrevocable transactions, direct Federal Reserve processing, round-the-clock availability, and centralized control via master accounts. But here is what should concern us most as Americans. The exit strategy is rapidly closing. Prior to CBDC implementation, one could transfer funds between different banks, utilize cash for privacy, or select alternative payment methods to preserve a measure of financial autonomy. Once CBDC becomes mandatory, moving money without governmental approval will become impossible, as spending restrictions will be intrinsic to the digital currency's code itself. The phasing out of cash will accelerate during the CBDC transition period. Compared to instant digital payments, physical currency will be portrayed as antiquated, hazardous, and inconvenient. Businesses will be incentivized or compelled to reject cash transactions. Banks will impose fees on cash deposits and withdrawals. Ultimately, paper money will become practically unusable, even if technically still legal tender. The masterful manipulation of public perception has proven exceptionally effective, as the majority of the American populace remained unaware of the unfolding events. A staggering 95% of bank customers neglected to review the informational dispatches circulated in July of 2023. Of those who did peruse these documents, 90% failed to grasp the profound infrastructural implications. While funds continue to flow, the allure of automated teller machines has served as a potent distraction from the fundamental shift occurring. The labyrinthine terminology of finance has effectively veiled this underlying transformation. Once citizens comprehend that their banking accounts are now operating on a Federal Reserve framework engineered for the deployment of a central bank digital currency, CBDC, the transition will be cemented beyond reversal. Alternative payment avenues are being systematically dismantled, and the use of physical currency is being deliberately curtailed. Private banking relationships are being reconfigured into direct government accounts. This is the very architecture of control that has been meticulously constructed. The blueprint for this undertaking was unveiled in 2019 with the inception of FedNow. By 2023, the essential infrastructure was established and the migration of accounts commenced. The year 2026 will witness the initiation of pilot CBDC programs targeting public sector employees. By 2028, conventional currency will be largely rendered obsolete. Within a decade, by 2030, complete dominion over digital currency will be fully integrated across our entire economic landscape. Under this new paradigm, individuals are stripped of their financial autonomy. Every expenditure will be subject to governmental coding rather than personal discretion. The acquisition of prohibited items will be impossible, access to restricted zones will be denied, savings beyond authorized thresholds will be disallowed, and contributions to unapproved causes will be blocked. Your monetary assets will adhere to governmental directives, superseding your own decisions. Perhaps the most alarming aspect of this profound metamorphosis is its execution without any public discourse or democratic endorsement. Americans did not cast votes for the Federal Reserve. Congress has not granted authorization for the implementation of a CBDC. Instead, the Federal Reserve unilaterally erected the necessary infrastructure, facilitated account transfers through standard banking notifications, and prepared for a mandated shift to digital currency. Your banking account did not merely experience an update in July of 2023, it transformed into a nodal point within a government-controlled payment oversight system. The foundational infrastructure is now in place. The pathway to CBDC adoption is complete. Your consent to the terms associated with FedNow served as the implicit authorization. Upon the official launch of the CBDC, the transition will be artfully presented as a necessary, unavoidable, and consumer-friendly development. By that juncture, all alternative options will have been eliminated, cash transactions will be severely restricted, and digital currency will become indispensable for economic participation. This outcome was not a consequence of your choice. The inconspicuous missive you disregarded in July of 2023 made this decision for you. The financial regime's transformation is now firmly established. The Federal Reserve has not merely upgraded your banking system, it has prepared your account for the government's total financial oversight. The infrastructure is in place. Legal authorization is secured. The timeline is operational. Americans have transitioned from private banking to Federal Reserve managed payments without truly understanding what they were endorsing. The groundwork for programmable monetary control was laid while our attention was diverted by promises of expedited payments and enhanced banking conveniences. The transformation has transpired quietly, efficiently, and irreversibly. Your funds now traverse the governmental infrastructure meticulously designed for the implementation of central bank digital currency. The subsequent phase requires no further permission from you. It has already been sanctioned by the stipulations you accepted in July of 2023.